Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, March the 31st, 2026. As you know, today is Tuesday, Gary's Market Forecaster, GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Wave 1's done, correcting down in wave 2. Is this over and we're blasting off, or are we going to still chop and need another push lower? Still not convinced this is the bottom, but price did what we kind of expected it to do. Look like that little 1, 2, 3, 4, 5. So is it possibly over? Maybe, but again, this is a very strong resistance level that's been on this chart for years now. As we were grinding back up here in 2014, hitting near 2015, kind of rejected there, tested it again, kind of broke above, looked like we were going, then we came way down, and we tested the same with a big rejection wick, came down. So this is a major battle zone, that 100.59 area, kind of on this bigger chart. So it was former resistance, turned support as we got into the 2020s. Support, bounced several months there, support. And most recently, as we expected, this wave 1, 2 pushing down in this bigger degree, higher correction wave 2, we expected this would push lower. Is this the end? Maybe. This could be the ABC correction. Wave 2 is done. We're breaking out. Or we could still go lower. But just remember, this wave 2 is going to end somewhere between here and our long-term target of 80. When we originally talked about this 3+ years ago, this area is where we're going to reverse, and we're definitely, in my humble opinion, going to go breaking new highs and head toward that 130 to 140 area. But is this the end? Well, we're got to take this former resistance, turn support, turn back to resistance level and convert that back to support. Then if we can get a run above that to hit that 102 short squeeze, then we could potentially go higher and push toward that 104 to 107 level. Let's jump into the trading platform and we'll see what we're talking about. That we got this major resistance zone. For the last multiple months, we kind of tried, failed, and we're trying it again. Is this the failure, or is this just a little retracement off of this occasional run up? Retracement, and we go breaking out. So just remember a couple of things on the dollar index. I expect more chop, up and down. It's going to chop for a while till it decides what it wants to do. We close above 102. We're going to hit that short squeeze, and I expect price to go pushing higher towards that 104 to 107 level, this big resistance box up here. But if we do start coming back down, next level to watch is going to be that 99 and change, and I'm going to show you what we're looking at. So ladies and gentlemen, off of this recent little move, we got a break above, we retested. We did make it, if you want to call that a slight higher high, but it's still that same resistance zone that we're struggling with. So the next level to watch is going to be use your Fibbo from the recent swing point low off the magic Fibbo up to the current high is going to be this 618 level, which is right around that 99.50 area. So this 99.56 down to 99.27 is the 618.786 off of that move. So I guess we can take some of this off. So we remove some of these levels. And this is what's most important at the moment. This low, that high, we're probably going to come test this. So after we got this initial move up, logical, if we're going to continue to go higher, we should probably come somewhere between this 99.60 and this 99.27, which again is the 618.786 zone. If we find support there to bounce off and go breaking out, we hit the 102, then expect we're going to go toward that 104 to 107 level. Got it? Otherwise, if we peter out here and we start closing below this level, then we have support here at the magic Fibbo. We start closing below that, then we have this support zone, which is the 618 off the prior low. So we do have several support zones. A would be this 95 to 95.56 down to 99.56 down to 99.27. So I'm going to remove this for the time being, just to get that out the way, because I expect we're probably going to come test this little support zone. So let's put a little small zone in here, which is the 99.56 down to 99.27. Make that a little small zone. I will paint that green. If this holds as support, that's what we're looking for a potential bounce off of here. But I would not be going long the dollar here. I'd definitely be in a position of authority, as I suspect we're going to push a little lower. The question is it going to hold here? We break that. We got support on the magic Fibbo. We have support in this zone. That doesn't hold. We'll come down to magic Fibbo. We break below that. Then we have this recent low up to the high. This would be the 618.786 zone of that scenario. So you need to keep an eye on this, that if we don't hold magic Fibbo, we're probably going to come test this green box. We don't hold the green box, then we're going lower low. So this is why I haven't confirmed that, yep, this is over. Stick a fork in it, it's done. The dollar is going to keep grinding, chopping, overlapping, laboring rise, and we're ultimately headed to that 130, 140 target. That is the case, yes, in my humble opinion, but I'm not convinced that this is the low. We may need still another flush, and we still have strong reason why this could still be the case, and we discussed that in great detail. You come back, let's go to a weekly chart, so it's a little bit more price action in here. And back here in 2020, as we made this retracement, we're expecting from this low here of COVID up to the current high, we retraced and made below the 618 level, which is all this price action over here. We didn't quite break this 94 and change right there, which is the 786. But from this low up to that high, the rule is you close below with a candle body, and we have it on a daily chart, a weekly chart, even a monthly chart, close below this 618 level. And by doing so, that gave us a high percentage chance we're going to go make a move down toward 85. That would mean we'd not only need a lower low here, but even need a lower low than this COVID low, setting the tone. So that's why I'm still leaning. I'm not convinced this bottom bounce is the end, even though it's definitely going to end. The question is, are we talking about the COVID low to the high? We get that 618.786 retracement out of here to go breaking out, or do we come back here back in earlier in the 2007-ish area when we bottomed down here at 70.74 in this chart, at 70.53 on this other chart, which we're always showing. this bottom down here at 70.53. This is where I originally looked for this move up, retracement to come somewhere into the 618-786 zone. I was expecting a deeper retracement. Well, Emil, I could be spot on, but it might not be off of this low. It might be off of these lows here, either this COVID low or the one prior to COVID right there in 2017. So if you take this retracement zone, see if I can move it here, if I can grab that, and just move this up to this zone, guess what? We got a deep retracement. We're already hit the 618. We're between the 618 and 786. We go from here. We're in the same boat. We broke the 618. We almost touched the 786. So if this ends up being the bottom, and we do go breaking out, which is, again, a high probability long-term, years from now, we're going to push up to that 130, 140 on the dollar index. But I was originally looking from this low down here, not the COVID low or this low here. So I was looking for a deep retracement. That was the whole plan. So again, if it turns out that we end and we're going breaking out now, then we use the long Fibbo. We could have used either one of these two for the bottom and then the breakout. So we got a deep retracement, continuation, we're breaking out. Or do we get the much bigger, deeper retracement and go breaking out? So I was very confident we were going to do the 618-786 zone. Are we going to get down here? Maybe. It's not over. But if we end here, then it's off of these other swing points, COVID low or this one prior in 2017. Like I just showed you, it didn't matter. Either one puts us in the 618-786 zone, which we're looking for way back 3+ years ago. And we talked about right there at that high. Hey, everybody, good time to short the dollar because we're expecting a big correction. Then we're going to have a continuation. So any questions on that? So is this over? We got to take this former battle zone out. Resistance, turn to resistance, turn support, 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 back to resistance. And if you look at this level and you go back in history, and this platform doesn't have as enough time frame in it or as data, but you can see that same 101 big resistance zone up here. And you can see it's been a magical area for this thing going way back, all the way into history. That this goes back into the 60s. You see, as we came down, a little bit of support, turn resistance, resistance, resistance. On the way up, it was resistance, turn support when we did all-time highs into the 80s, I believe that was. Yep, in the mid-80s. Then we came down, found that same support zone, chopped around, turned back to resistance, resistance. I mean, this is for decades and decades, right? Resistance, resistance, turn support, support, back to resistance, back to support. And then we broke down until recently we kind of broke above, held a support. I showed you on the smaller time frame. Then we broke back down. So we're still testing as resistance now. So in order to get to our target up here, again, it's a high probability, 130, 140. That's definitely where we're going. The only question is this correction down over, or do we need to go deeper? Then we go up here. So this is a given, in my humble opinion. We're definitely going up here. And it's going to take years, not days, not weeks, not months, years to get up here. The question is, was this correction here over and we're starting to slowly work our way up? Or do we still need another thrust lower? Do we actually break below the COVID low and make new lows somewhere in our original low, high, 618 around 87, 786 around that 80 target? That's what we originally talked about. Are we going to get that far down? Well, if we get to these extensions, that's right in the wheelhouse, right? 618, 786, definitely right in the thick of it. So what the rule is, from this low to that high, we did take out that 618. So the likelihood from that recent low to that high, we come to this target is still viable. which would put us right in the thick of this move into this zone of the 618,786 off the bigger low to this correction. So that's where we stand. So currently on a daily chart, current price action dictates that we're probably going to see some more downside, because we were talking about this last week. And this is what I thought might happen on this bounce, that I said, if we did close below this, expect to come down to this green box. What is that green box? Again, you put so many lines on here, all you see is line, but that recent low up to this current high, whether we use that one or even the most recent one, that's 618 right there, 786 right there, is this green box. So far, so good. So if we were to close below the magic fibbo, we said it last week, if we close below this, expect to go lower. If we bounce, which we kind of thought we would, because this looked like initially 1, 2. So that looked like the wave 1. This looked like the 2. And then we subdivided 1, 2, 3, 4, 5. And we said, if that's the 1, 2, 3, and this was wave 4 correction, right? That we couldn't go into this area of wave 1. That's good. We didn't. And then we go bouncing. That would push us into that last little push of wave 5 up. And we expected that we would not reach that wave 5 pushing into 102 up here. The proportions of A, this wave 1 equaling 5, still put us about where this little arrow is. What was that arrow? Let me move it for you and I'll show you. That was this guy. If you do the size of wave 1, this low up to that high, and then you repeat that wave 4 to 5, we'd still be below that 102 level. So we didn't quite do equality on this. But this could be the 1, 2, 3, 4, 5. 5 is not really truncated. It did make a slight higher high. Sometimes wave 5s can be a little shorter. Sometimes it equals wave 1, but there's no rule that it has to equal it. So now that we're seeing price hit the resistance zone, I suspect we're going to test the support zone. What is that support zone? From the recent low to high, that's the 618,786. You notice how I keep referring back to these numbers. 618,786, 618,786, and we got extensions. 1448, not true Fibonacci level, but it's 90% of a true Fibonacci level, 1.272. And this is typically where price likes to go when you break those levels. And you break above the 618,786 zone, you're going to go toward the 1448 and the 1272 zone. That's why I kind of expected this would probably go higher. But now that we're holding resistance, we're going lower. So expect us to go down this 99.50, hint, 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 slash, well, 99.56, 99.27. The question is, does it hold to bounce to go up? Or does it break down? Next level would be the magic fibbo for support. We don't hold that. We're going to test this guy. And if we don't hold this, it's over. We're going lower low. So this is why it's in question. Is this the 1, 2, 3, 4, 5? And now we look for a little 3-wave correction. If we get something like this, Emil, James, Mr. Tucson, others, if this is the 5-wave up and we get a little 3-wave correction and it holds this green box down here, then we go breaking out to a new high, hit 102, we're definitely going to go to 104, 107. Why is that? That's the major short squeeze. So we have some major high probability action. We close above 102 today, tomorrow, next week, next month. We close above 102. It's going to hit the short squeeze, and it's going to force price to push about 3 points roughly toward that 104 and change to 107. Why is this pink box so important? It's from that bigger degree recent high to a recent low, right? A recent high up here, down to this low. That is my 618, 786 zone. Magically delicious. So again, we close above 102. Where are we going? We're going like a heat-seeking missile toward this target, and it'll grind its way up there. Highest of highest of highest probabilities. In the interim, it doesn't mean we have to go this way. We could turn down. And I suspect we are turning down, as you can see. This was the plan. I warned you when we got up near this big battle zone. We've tested it for multiple months now. Tested it, looked like we were breaking out. Nope, not so much. Went down, tested it again, not happening. Tested it again, we got a lower low. We tested it again, got another lower low. Tested it a couple of times, ultimately made another lower low. So here we are, tested it again. Well, does that end up with a lower low? Ian? Maybe. Or does this thing correct after a 5-wave up? 1, 2, 3, 4, 5. Now we get a 3-wave correction, and say we come down to Magic Fibbo, bounce a little bit, get a little retracement off of that, finish with a beautiful little 3-wave correction. And then we see what? We hold this green box. That bounces. We break back above the Magic Fibbo. We break a new high. We hit 102. That's definitely going to say we're going up here. And then what? Once we get to this 104, 107, if I'm long during that journey, I'm taking profits because this thing could easily get rejected off of that and still go to a lower low. That would just simply be this bigger decline, that high, this low, 618 retracement, failure, then we go down to a lower low. Check out what that looks like and why these levels keep repeating themselves. So I'm going to go ahead and take all this stuff off so you can see what we're looking at. And you're like, Gary, all I see is lines and numbers and you can't tell what that is. But this is the bigger one right here. So we have a high, we have a low, and I'll just go ahead and put a fresh one so we can see everything. Right? We got nothing on the chart. So what if this is the recent high out here to this low, and we go to this lower high, we ultimately hit the short squeeze, we go ripping toward this 104 to 107, 618, 786 retracement. What happens if we hit that? And this would just simply be time consuming, obviously, but a simple 618 retracement to fail and still go down to our extensions. Look where the extensions are. You can't make this stuff up, right? 88, 86, 81. This is where we originally talked about this coming down to. What is this? That's that 618 of the bigger move, that 87 level, and then the 786 down here, down at 80. So this is where we originally looked for that much deeper retracement, and this could set up even if we go bullish. And it looks like we're breaking out, but stop at this major resistance level and get pushed lower down to the extensions, which would put us right in that 618, 786 off of what? This bigger move. Yeah. This lower low up to that high, we get rejected here. We go to these extensions, and where we're sitting, 618, 786, which we originally looked for 3+, almost going on 4 years now since this high back in September of 22. As we move into September of 26, that'll be 4 years ago, we talked about this bigger correction, and I said, since day one up here, I said it's going to take years to do this. And here we are going into about 4 years, and then we're going to go up here. This is where we're headed. Are we finished with this bounce to go up there, or do we need to go lower before we're finished? That's what price action is going to dictate. So in the short term, well, Gary, I like the big picture. I like knowing we're going up here, but I would not be going long the dollar expecting us to go ripping up there right now. It is not something that's going to happen in days, weeks, or months. It will literally take years to get up there. Just like I said over here, it would take years for this correction to play out. And it's going to take, once the correction is over It's going to take years for us to go up here, but this is where we're headed. In my humble opinion, no ifs, no buts, no ands. We're going up here. But first things first, do we need a bigger flush to finish it? Or do we even come down to this bigger degree? And again, the reason I'm holding on until price proves otherwise, that low, that high, you can see we took that 98 out. Look at all these candles. We were below this green line, which is that 618 retracement off of that. We were below this for days, weeks, and months. You go to a monthly chart and you zoom in on this monthly chart and you can see where that 618 level is. Oh, I moved the wrong one. I always do that when I'm doing this, but you can see here that 618-786 zone, not off this bigger one yet. We didn't get quite to my 618 yet on this bigger zone, but on this prior one here, that low from COVID right there up to that high, and we did take that 618. You can see there's monthly candle bodies in this. Amen. Not just dailies, not just weeklies, not just 3 days, but you can see that 618 level right there. We closed below it. Look at that red body there. The green body went back above, then back below, above, below, above, below. We're not, today's the last day of the month, so this may close above, but it's still showing we closed on a monthly candle body below the 618, which says we have a 78%, 75+% chance. And we want to get this actual low right there. So remember the little trick with this trading view. You hold your control key down and then you pop that and it'll lock it to where the low is. And then you check that low. The low was 89.209, and lo and behold, it's at 89.209. So if you want to make sure you get the exact high or the exact low, like you can see here on that high, the high was 114.778. So you take that, hold the control key, and you just move it toward the end of that tip, and it'll lock it in exactly at 114.778. How about that? So, ladies and gentlemen, the bigger picture from this low bounce went up to this high. We got our correction we're looking for. And we got a deep retracement off of this low. Remember, that was the whole plan when we talked about the bigger high at 114. We were going to make a deep correction off of this thing into a 618-786. Well, if we use this as the low, we're already there. And if we continue lower and we ultimately come down to this low, then here's the target we originally talked about. But I would be remiss not to remind you that at some point the wave 2 ends and we go blasting off to 130, 140. So again, this is where we're going. Is this over and we're ready to go breaking out now? Again, it's going to take years. Even if we push lower, it's still going to take multiple years to get up here. So I'm not convinced that this is the breakout. And I'm giving you scenarios to watch if it plays out in that manner. And what manner is that? If we close and get above 102, the short squeeze is going to push price toward this 105, 107, which again, on that bigger scale, is this 618, 786. So I got to go to the 3-day to show you that. It is that 618, 786 bigger retracement, that important level. I actually got to go to a weekly to show it to you, but it's off of that bigger scale. Remember, I took all this off, but from this previous high right there, and there's a bigger high over here, we're going to go breaking out to get to that 130. But off of this high here, we expected a deeper retracement. And right now, we got it off of this low, but we're not quite there on this low. So again, which one's going to play out? Up and until price proves otherwise, no reason to believe we won't make a lower low. And currently, big picture into the small picture is that we're expecting more downside. as this will probably test this low up to the high, that's 618786. So whenever you see these on my chart, just remember these boxes represent support or resistance when they're pink and green, but they're typically going to be our 618786 zone. So this one here, from this low to that high, that's the 618786 zone. This bigger box is this prior low over here, low up to the high. That's the 618786 from that one. Got it? So in closing, be careful. I would not be going long the dollar. Yes, I think we're going to 130, 140. Why wouldn't we go long now? Because we're likely to get a bigger correction. And if this is that 5 waves so far, 1, 2, 3, 4, 5, we would expect a what? 3-wave correction. And that could get us, maybe we drill down toward the magic Fibbo, get a little bounce from this recent high to say we come to the Fibbo, we do a 618 retracement, we get rejected, we make the bigger 3-wave correction, bounce off of that, go breaking out. Then it kind of sets the tone. We see that, then once we hit 102 and close above, what do? We go long. This is a short piece, no matter what time, day, week, or month. Dollar index closes above 102, you want to go long the dollar. I can't tell you what to do, no buy, sell, the whole recommendations. That's what the chart is telling. We close above 102, we're going to go where? We're going to go grinding like a heat-seeking missile, a big magnet up here. We're going to get sucked and pulled toward that 104 to 107 level, which again on that bigger high to low is the 618786 zone. So what do? I go long at 102. I close the trade up here because it's likely going to get rejected out of that. The question is, when it's rejected out of this, do we go higher, low, higher, high and start to break out? And this is the end and we're going to 130, 140. Or do we get rejected out of here and actually go breaking lower low? That we shall see. But in the short term, this is likely going to get us a deeper retracement toward the 618 small little green box here. We break that. The next level is the magic Fibbo. We break that. The next level is the 618786 off of the bigger move. So let's put a few of these back in here. That's why when you look at it from a high level, you go, all I see is lines. Well, this is why. Low up to the high. There's your 618786 zone. Beautiful. That's it. And from that low to that high, same thing. That low to that high, 618786 zone. So that's the whole point. Are we going to get here in a bounce and go higher? Maybe. Are we going to break below this? Next level is magic Fibbo. We don't hold that. Next level is this. We don't hold that. We start closing below this green box. It's over. We're going lower low. Just like I said for the last multiple months, I didn't think this was, well, we can start over here. This wasn't a low, got a 3-wave correction, we need a lower low. I said this, another 3-wave proportion correction, likely going to get another lower low. We did it. Then we had this chopping and overlapping action. And I kept saying that this isn't the breakout either. We need another lower low. And based on this latest price action, initially it looked kind of weak and pathetic, but if this is the 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, this looks impulsive so far. So this is a potential right there. 1, 2, 3, 4, 5. Now, what happens if this is the reversal? We must, no ifs, no buts, no and, we must see some sort of 3-wave correction out of this. Then a continuation, which would be in another 5-wave up. And this could be the initial correction, right? That's why corrections are difficult to learn and understand, but I've been doing this for decades with a God-given talent to read and interpret price. So we may, if that is a 5, we get a 3 and a 5. And where would that lead us? If this is going to run up, we get a 3-wave correction, another run up, guess where we're headed? It would be the same. Check this out. From this low up to that high, we get the correction, and then we start doing the same type of thing, 1, 2, 3, 4, 5. That's going to hit us above 102. right? So even if this is the initial move up, we get this correction to come test this green box. Guess where we're going to end up? Above 102, which then tells us we're going to 104, 107, right? But that could be a bigger A, B, C, and still give us this crank down here. So the only way I'm going to call this bottom a done deal, and I've already told you, we're definitely going to 130, 140. That is not in question. No matter what price does, we go ripping past this and we start ripping higher, we're going to 130, 140, or we break down from here, we make new lows, we're still going to 130, 140. We continue to push that deeper retracement toward that 87, 80 zone down here. We're still going to that 130, 140. All roads lead to 130, 140. The only question is, where do we finish this correction before we go blasting off? And this could end up like this type of move, and we still get that flush lower. So this is why I keep bringing this up. On the higher time frame, from that recent low to high, we took out the 618, which says we're likely going to go 75% chance we go visit this 1448, is around 85, and a 70% chance we go visit 182. And if that happens, what do we have? We're at that bigger degree where our original target was, off of that bigger low, which is way down here, right? And that's what we've been looking for ever since the top and reversal 3+ years ago, going on 4 in September. It'll be 4 years of this correction, and we were thinking we were going to get a 618, 786 retracement. We'll see if that plays out, but it's going to be a 618, 78 retracement off of one or the other. Either this low down here where we get to 87, 80 range and then go breaking to 130, 140, or it's off of this low and we're already at that 618, 786 and we go breaking out. When do we know? When we close above this pink box. That sets the tone. That's the end of this low over here, and we're going breaking out. If not, and we do go deeper, then we're still going to end up breaking and going to 130, 140. So big picture, we get the deeper retracement. We get the 618, 786 off of this low down here at 70. We're still going up here. Well, we already have the low, the high, and the 618, 786 retracement, and we're already in the midst of going up here. Either way, we're going up here. Get the message. This is a done deal, in my humble opinion. I cannot stress that enough. Just like I stressed it here, we were going to get a deep retracement one way or the other. It would take years. Here we are ticking into almost 4 years. In September, it'll be 4 years since that top and reversal. And we're going to go up here, yes, but is the last low the low, or we need another low? Then we go breaking out, or we keep this grind for another year or so till we finally get toward this bigger retracement zone, and we get there, then we go do it. But this has been spot on, and I expect it's going to continue that way. So in closing, be careful to the upside. This is not the time to think dollar bull. We're going to the moon, Alice. As Ralph Cramden would say, we're going to the moon. Because even if this is the beginning of this much more bullish move, and that was the 1, 2, 3, 4, 5, we still got to get a 3-wave correction off of this, which was saying we're going to make lower lows, lower highs, lower lows, and what appears to be some sort of 3-wave correction. Maybe it's a very modest, we kind of bounce off of this, rally, hit the magic Fibbo, then we go breaking out. Or I would much prefer a deeper type retracement. We come to magic Fibbo, bounce, fail, and come to this bigger 618 type of retracement. That would really set the tone for the big bounce. Fair enough, but you got to be careful. Why? Because this last time when we were here, and I said, look, all this overlapping chopping action suggests we need a new low, but what did we get out of this? From this low to that high, we got a what? Perfect 618 retracement. Line's not even on the chart, but I can assure you that's exactly what that was. So and we'll do the exact number. Remember, push the control key, get down at that low, up to this high. And where was that retracement, ladies and gentlemen? 618. Can't make this stuff up. So why am I saying be careful? Because we got this chopping, overlapping. We got a beautiful 618. We bounced like we were going to go breaking out. Woohoo! And lo and behold, we went back to the magic Fibbo, got spanked, and made yet another lower low. And what did we hit? 1448. These numbers repeat over and over, and I don't care what you trade. Stocks, futures, commodity, ETF, treasury, cryptocurrencies, any new entity they come out with, any asset class, anything new in the future, these numbers always repeat. Hear my words, always repeat. And where do we come down to bounce? That exact target. So this is why I put the 1448 in there, and I do the 1272, which is an actual Fibonacci retracement level. 90% of this I've just found over the years it's very accurate, and I always take profits at my 1448s, even though I'm shooting for the 1272 or my 1618s or further onward and upward or downward, depending which way we're trading. So is this latest bounce the reversal we need? We did make a low. So every time we make a new low, that could be the end, because remember, we're going to 130, 140, or do we need yet another one? Only time will tell. So in the short term, expect more downside. If that was the 5-wave, we need a 3-wave correction before we can continue breaking out. And if you don't believe in ABCs, 1, 2, 3s, Elliott wave, any of that hocus pocus, use the Fibonacci 618, 786, 1448. We got all these particular targets. That's all in the magic mix for you. And we have templates that have all that registered for. Everything's good to go. But I suspect we're going to go lower, because we need a 3-wave correction out of this. And again, we don't hold the magic. Well, we break below this little support zone, we're going to the magic Fibbo. We don't hold the magic Fibbo, we're going to the 618, 786. And it doesn't mean those of you that are, okay, we close below this line, then we're going straight down in one day, one session, it's going to hit this level. It could just push on down there, or it could certainly stair step its way. But the probability it goes seeking that out once we close below the magic Fibbo, that's typically where it goes. When you know that, you can take advantage of these small moves or upper moves or bigger moves down, etc. when you know this formula. And that's what we give you here every day. When we're in class, we go over this ad nauseum, right, guys? Till you can't. Gary, I got it. All right. So do we get the 3-wave? We're definitely going to go lower. This doesn't just look like a pause in the motion and we're ready just to keep ripping. This looks like we need, after a 5-wave up, if that's what that is, then we need a 3-wave correction. So let's see if it acts like it. And next level resistance is still this big support zone up here, that 1.36 to 101.60 area, which we've been testing. And again, that goes back months and months and months and months. And did I say months and months? And we showed you this level on that bigger chart. It goes back to as far as time began with these charts, as far as these, whatever platform you're in allows you to go back there. But you can see that level is magical level, and that's what we're running into. So it's no easy feat to get above it, to go to that 130, 140. It's going to have to prove itself. Then you get past this one, you got the next big one up at 104, 105. Well, 102 first, it squirts to 104, 105 area. And then it sets the tone. Are we breaking out, or are we going to get rejected and still come lower? We shall see. All right, so let's continue. I would not go long the dollar right now. I'm not saying load the boat on a short, but it's going to correct after this move up. We need a correction, then we'll see what it does. Again, we don't hold this, we go to magic fibbo. We don't hold that, we're coming down here. We close below this green box. It's over. We're going lower low. And here's your target zone. What about the euro and the pound? We'll get through this and continue. Got a lot to cover. Euro and pound is just chopping in the inverse relationship. The dollar index is made up of a basket of currencies. The most predominant currency in that basket is the euro dollar, most prominent currency pair traded. And it looks the perfect inverse. See that euro dollar? Look at the dollar index. Perfect inverse. You got this chop to the upside, hitting this big resistance zone, and the euro dollar is the inverse of that, is the euro dollar to the downside. We got the same looking 5 wave, and we got this chop right in the zone, and we're just stuck. So what do we need to see bullish wise? The dollar starts breaking down, the euro is going to rally. The dollar breaks below the magic fibbo and goes test that green box we just showed you. This is going to break above the magic fibbo and go test this pink box above. We close above this, we're going higher high. No ifs, no buts, no ands. So what are we looking for? If the dollar breaks down and hits the magic fibbo, this is going to rally to the magic fibbo. The dollar breaks below that magic fibbo and starts heading to that green support box. This euro is going to head higher toward the resistance box, which is the 618786 of the prior move. Got it? So is this the end and this is part of a correction and we're continuing? Or does this fizzle and go lower? The dollar breaks higher, this is going to break lower. The dollar starts going lower, this is going to break higher. So what are we calling for? The dollar to break lower at the moment and test the magic fibbo. That's kind of the plan. Well, first thing we have, let me just go back to remind you. Actually, I could do them side by side. So I'm going to do the dollar here, and I'll put the euro over here, and we'll get to the ES market. Don't fall for this as being the low, Emil. This isn't it. This is not the low where we go blasting off just yet. We're going lower low. So be careful on that. Even Goldman Sachs, you know, the ones you can trust with your life, back in the day when Goldman and all the big dogs were saying, buy, 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 and they were shorting the daylights out of the market, and they were telling everybody to keep buying, while they were loading the trucks and tankers and everything else out there with puts. Well, they're saying this is not a sustainable bottom, that it's going to go lower low. I believe it. Technical picture says we still need to go lower low. So be careful on the bounce. Not because Goldman Sachs says it, but I think this is trying to get some suckers in there. Put the call ratio, and 78% of retail traders keep buying this dip. I'm a big buyer of the dip, but I warned you we need to go lower low. We're there, but this is not the bottom. Like I told you during these bounces, still need to go lower low. And we're still looking for a deeper retracement, either the weekly retracement on the magic fibbo or the 3-day. So I think at least this one, and maybe even turn out to get here, but we'll get that in a moment. But let me finish what I was doing and come back toward that euro dollar. So there's the euro, there's my resistance zone. We got the magic fibbo. Here's the dollar index. I got euro on both. Now I can go back to my dollar index and show you side by side what this looks like. It looks like the perfect inverse relationship. So the plan is this thing to at least test this zone here. We don't hold that, we're going to magic fibbo. We don't hold that, we're going to the support zone. What is the euro doing? Well, we're at least going to test this recent high and low. We're going to test that 618786 zone, which is a little bit higher, like the dollar. We break that, we're going to magic fibbo. We break that, we're going up here, just like the dollar. We don't hold this, we go into magic fibbo. We break that, we're going to the support zone. Got it? So easy math means if this breaks down, we don't hold this, we go there. We don't hold that, we come here. Then what does that look like on the euro dollar? No ifs, no buts, no ands. It's going to happen. It's this right here. We break it, we're going there. We break that, we're going here. What if the dollar breaks that support zone? We're going lower low, extension. That's it. That's where we're headed. We take the support zone out, we're going lower low. So what does that tell you about the euro dollar? We break this resistance zone, we're going what? Higher high. There's your zone. Pound dollar, pretty much the same. Is this the end and we're going to find support here, or are we going to go lower? Well, it's a beautiful retracement right now. It's hitting the support zone. And is this the end? Well, if the dollar goes ripping higher, this is going to go lower. If the dollar starts going lower, this is going to go higher. So we're in the same boat here. The big level is going to be, and we can redo this one since I don't have it on the chart. You got your high up here. We got the low here. So we need to break, kind of adjust that because we got a little bit lower low now. Here's that 618786 zone. So what if the dollar goes back toward the magic fibbo? The pound's going to rally towards its magic fibbo. If the dollar can't hold the magic fibbo and breaks below and moves to that green box, the pound dollar is going to make a run toward this pink box, just like the euro. And if the dollar breaks below the green box and goes lower low, the pound's going to break the pink box and go higher high. Everybody good so far? And we got targets up here. Beautiful. That's a given. We break this and we close above this pink box, we're going up here. No ifs, no buts. Highest probability. 75% we go to this one, 70 plus we go to that one once you clear this resistance zone. So a lot of times all I do is wait for the obvious and trade the piece. And some people say, well, what about that big move to get up there? Well, you can scalp, you can do certain things in here, but these are high probability outcomes. We close above this pink box, we're going several hundred pips up to this zone. And bigger picture is the reason I'm still believing this recent swing point high in this 138 zone is not the end, is this bigger picture here. From this recent high down to this low, we took the 618 out, we closed above it. We took the 786 out. So it tells us, right, ladies and gentlemen, 75% chance we go and visit 148. 70 plus, we're going to visit 153. Those numbers are still viable until what? The pound breaks below this big green box down here off of the low up to the high. It breaks below that, then it says we're going lower low. Well, just like when the dollar goes ripping toward that 130, 140, this is going lower low. No ifs, no buts, no ands. All this is on the pound dollar is a correction. The question is, where's the correction going to end? Is it going to end here at that 140, 150 range? Is it going to end here toward that 148, 153? Is it going to go up to that bigger degree, 1618, 786 type of retracement? Then go lower low? We're definitely, hint, going lower low. No ifs, no buts, no ands. The question is this correction over just yet? And I'm not convinced that it is over and we're ready for this. But at one point and some point, we're definitely going to go lower low because that dollar is going to go ripping that at 130, 140. The euro is going to go lower low. The pound's going to go lower low off of these lows. Got it? Just like the dollar is going to go up to 130, 140, these are going to go down. Big picture, years. Just like I told you here, thousands and thousands and thousands of pips later. We told you 3+ years ago that would be the case. And I'm right now on the hard right edge. Well, I want to know now, not the bigger what's happened in the past. What can you do for me now? Well, be careful to the downside. I would not overwhelmingly be shorting the pound or the euro right now. We're in a support zone. The dollar, after its move up, needs a correction. So if the dollar starts pushing back lower, this is going to start pushing back higher. if you're going to buy something like this, get to a position of authority, because this certainly could do some sort of retracement, maybe back to the Fibbo and go lower, or go up here and go lower. Maybe we need lower low to clean this up to give us the final push before then we go lower low. But I'm not convinced this is the end of that high, meaning that from now on, any rally will end up lower than that. And then we're ultimately going to break that low of that 105 I showed you 3+ years ago. We're definitely going to do it, but do we go higher first? And the percentages still are that we're going higher high than this guy, and maybe even go higher high over here before we're done. So yes, there's a 75% chance we go towards 148, but there's still a 25% chance we don't. I like the odds better when I trade the higher percentage. So is this correction over? Maybe. Do we break out? I still think this is not the end, that the dollar will break down, but if I'm wrong, we know what to do. The dollar hits 102, push toward that 104, 107. This thing's going to plunge down into this zone. No question. Dollar starts pushing 102 to 104, 107. We're going to push, and wouldn't even be surprised. Not only we push to this zone, we might push the limits and start pushing back towards maybe 115, 120. I'll say that again. Dollar hits 102 and rips toward 104, 107. This thing is coming down and testing this 127, 123 zone. And if the dollar pushes the limit toward 107, kind of pushing those limits, this thing will probably push down toward maybe this 115 area. All right. All righty. Pound yen, I warned you to be careful with this. It was going lower. Sell the rally. That this price action was screaming. How about that, Emil? How do you do this? God-given talent to read and interpret price. That's how. And I warned you during these rallies. This looks impulsive. This still looks corrective. And the only way to fix this is for this thing to go lower low. I've been calling for this magic Fibbo for quite some time. Do we bounce off of that and go higher, or do we continue lower? Well, this is the first one. We need a lower low, so we got to come toward the magic Fibbo and make a lower low from this low, which would put us somewhere around that 204 to 203 area. And you can see from the recent high to low, lower high, the quality would be 204.80. Push it to the A equals C. Be around that 203, 202 area. So this is where I think we're headed. I've been saying it for weeks during this bounce. Remember this first move down? I said, we're going to go test this box, 618786, and then we're going to start breaking down toward the zone. And this looks like beginning of that push. Probably get a bigger push, come down to magic Fibbo, bounce a little bit, and then come down into the zone. But if that doesn't excite you, several hundred more pips just to get down here, then this much bigger picture, back in the carry trade unwind, we hit this low. This is very impulsive. This is still corrective. And this looks, in my humble opinion, a big A. It looks like a terrible A. There we go, A. And all this chopping and overlapping, even with this big higher high, that's expanded flat correction, is the B. And not only do we need to come here, but it looks like over the years to come, we need to do something bigger in the ABC to come back near the low of 180, maybe 180, 185 to finish that completion. And let's wind the clock back into COVID. I was the biggest proponent on buy the pound yen. I bought the dollar yen, buy the pound yen, carry trade. We had low interest rate on the yen, higher interest rates on the pound and the dollar. And we went long this. And I said, at this COVID low over here, buy this. It's going to take multiple years, but it's going to go up about 8 to 10,000 pips. So it'd be a long-term journey. And we said it's in the archives. And what were we talking about? Show you the bigger picture. We said at this COVID low over here, we were going to go and break this high and move up. Exactly what we got. Then we hit the COVID from COVID low, 8,000 plus pips as we expected. We got that liberation, well, it was before Liberation Day, the carry trade unwind. And we got that impulsive move. And this is the ABC. Then we got thousands of pips more to go. We're at 209. We got to go to about 180, 185. 2,000 more pips. I like it. So the first things first, for those of you that don't like the long term and take years, we'll ask our members that bought down here, Mr. Tucson, and saw that big move up. I think they like it. Tens of thousands of pips later. And now we're looking at this. Definitely think we're coming down here. Is that the end and we go breaking out? Maybe. Or do we get that bigger correction that says this little ABC plays out, then we get the bigger ABC to play out, and next thing you know, we're down here at 180, 185. So why are we thinking we need to go short? Monthly overbought, weekly overbought, daily overbought. It's just screaming on the software. Pound yen, that's the dollar. Let's go to pound yen. I got it on here somewhere. Daily's turning back over. Talked about selling that rally, got the trigger lower. The software could have traded that automatically for you. Or we got a weekly. That, what did we call for, Emil? You were here weeks ago. I even drew this. I said, let's see how we engage, disengage. We engage, we're disengaging. Well, guess what we got? We got the red hook down, blue hook down, green hook down. Even while this thing was going up and it was rallying, what did I tell you? Look out. This thing I anticipate is going to disengage, disengage, disengage. And when that happens, what do we know about slingshot phenomenon? When it engages and disengages, you go back to the low and you make a new low, highest of highest probability. So this software is screaming, we're going lower low, we're going lower low, we're going lower low, which is what? That low down here. We're going lower low. We're going to get sucked and pulled into the cloud area. And that's that 204, 203 area that we're looking for this to continue to push. And we warned you when we hit that high up there, what did we have? A monthly overbought. Weekly was overbought, you can see. Monthly. Beautiful. Beautiful. So this is why I'm expecting that correction to go down several more hundred more pips to reach that daily magic fibbo. You get the magic fibbo, part of the software package. You can see it on this chart. Here's the daily. We're going. That's where we're headed. And my daily turning over, got steep slope angle separation. I'm expecting this daily over the next several days to continue to grind lower. And it doesn't mean we don't get these little chops and bounces. This could even engage, disengage on the daily, but the cycle is going down. Why? Weekly. This is the beauty of this software, Mr. Tucson. We now formally had a PAI hook, trend momentum cross, slope, angle separation. And what does that mean? When a weekly hooks and crosses, the daily cycles. Huh. How's that? When you get a weekly hook and a cross from overbought, the daily cycles. And what did our daily do? Cycled, cycled. Huh. Not too shabby. Then I told you the daily was likely going to grind and grunt its way up, and we're going to get a lower high on this. And when the daily turned back over, we wanted to go back short again. Now this is expected to continue lower, continue lower. And why? Because before that, when we had the weekly hook and a cross, what do we have now? PAI's back down. Look, red's pointing down, blue's pointing down, green's pointing down. And the trend momentums are down. So this is a brand new weekly hook, weekly cross, slope, angle separation. So what does that tell you? We're going lower low. Got it? There you have it. Trading's not that difficult when you know what to look for and you know when to take your time. Yes, trading does always involves risk. No software, nothing out there can guarantee no losses. Anybody tells you you'll never have a loss, run. But this is high probability, and I kept calling for this, and I even painted the Picasso. It would happen, and it's there to meet your eyes. We're going lower low. That means this low will be taken out. Got it? Expect this is going to continue lower in the weeks to come. And I'm looking for this even more so. My monthly has a PAI hook. We don't have a trend momentum cross yet. But what happens when you get a monthly hook? Right there, we get a PAI hook, trend momentum cross, the weekly cycles. You get a monthly to hook, trend momentum PAI, the weekly cycle. You get a weekly to hook and cross, the daily cycle. Get a daily to hook and cross, the 4-hour cycle. Get a 4-hour to hook and cross, the 1-hour cycles. Get it? So options traders, how does that help me? It typically takes a monthly 2 to 5 years to travel, a weekly 2 to 5 months, a daily 2 to 5 weeks. So you can do options off of when we get a weekly hook and a cross, and I know the daily is going to cycle down. I can do options somewhere, monthly options plus 4 to 6 weeks minimum, and give it time because it takes about 2 to 5 weeks for a daily to cycle. Pretty good stuff. Been doing that for a very long time. So this is why. Guess what happens when the monthly hooks and crosses, like we got over here? What I just tell you, when a monthly hooks and crosses, what does a weekly do? Weekly cycles. Huh. What did the weekly do? Weekly cycled right there. Cycled. Got it? So that's high probability. That's why I'm expecting this continuation. Is this going to go all the way to oversold and give us weeks and weeks and weeks and weeks, which again, a weekly takes 2 to 5 months? Is this going to take months for this thing to continue? Once the monthly crosses, we already got the hook. We just need to cross right there. And if we see it again, like we did there, we see it repeat, then it's not only we're going to go lower, but it's going to give us the bigger picture. And this would be the monthly slingshot up that's disengaging, and this drifts lower, and what do? We go back to that low, bigger A, B, C, and that pushes us down to that 185, 180 zone. So remember, this is setting up not only to go lower toward the daily magic fibbo, but if this continues to hook and cross back down, it sets the tone. We're going to visit that 184, 185. Now that could take months. What did we say? It could even take a year plus. It takes 2 to 5 years for a monthly to cycle. So this thing could take years to come down here. But it's a high probability we start hooking and crossing steep slope angle separation, and we get that monthly engaged slingshot to disengage like it's starting to do. All I got to do is get this to cross, then it's sell rallies for the next couple of years or so. This thing could go plummeting much faster, like it did here. In a couple of months, it did that. Big move, 2,700 pips. This was 2,700 pips in less than 2 months. You can see it. Or we just grind lower, but it's going to take somewhere in the neighborhood, could take months to years for that thing to play out, but it's setting up. I digress. You get the point, but let's continue. What about the markets? Don't buy them. Not yet. Scalp them. I expect a bounce, but don't buy it with the expectation this thing's ready to go breaking out just yet. I still think we're going bubble hunting, but I'm not convinced that this retracement is done and we're ready to go blasting off. This does not look complete, whether you're looking at SPX, ES. This is a bounce we're expecting. Why? Software. Oh, I didn't open up my NinjaTrader? Oh, well, it's available on NinjaTrader too, by the way. So is this the bounce we're ready to go breaking out? I don't think so. I think this is going to fizzle and we're still going to go lower. What are the key levels to watch? The daily is now resistance. See my magic fibbo? The daily is now resistance. So come over here to the software, And we can see what that looks like here on ES weekly. Weekly still pushing lower. It's not quite finished. Still got a little something left. So this is why I'm not convinced this is the reversal to go breaking out. My daily has been not only pushing lower, but slingshotting lower and lower and lower. So here you go. Why are we getting a bounce? We got a PAI hook, got a little trigger bounce, but this is not the one I want to buy, hold, and look for a breakout just yet. I think we're going to slingshot lower yet again so that that weekly can continue to push lower and finish that cycle. And why are we looking for that? Guess why? We have a weekly hook, excuse me, a monthly hook, monthly cross. We don't have the greatest steepest slope angle separation like we did this last time here, which was Liberation Day. And then that's the run. But we're looking for this monthly hook, monthly cross, weekly cycle. And that's what we're in the midst of doing. PAI hook, trend momentum cross. See green below the red, just barely on that tip. And then we have the likelihood the weekly is going to do what? Finish the cycle. Not quite finished. Look at money flow, a little shy. So I still think we got a little something left. So Mr. Tucson, I think we're going to get this little bounce and we're going to slingshot lower on the daily. And I'm looking for at least, see the weekly magic Fibbo, that would be ideal. That low up to the current high, we get a retracement down here to the weekly, for example. That's a beautiful 618 retracement slash magic Fibbo zone to bounce off of to go breaking all-time new highs. Is this the end? Last time we did it was Liberation Day back here. Are we going to do it again? Or do we stop on the next big support level, which is in between here, which is the 3-day? And I'll show you on this chart. So ES, we got the daily is now resistance. Magic Fibbo we're talking about, that line right there is now resistance. We got the 3-day. This is where I think we're definitely headed, at least. So my initial support zone was this. We broke it, reached the target. Now what do we expect? Lower high, lower low to come toward this 62-ish. You can see this magic Fibbo is the bottom of it's at 6,091, basically 6,100. The top of it's sitting at 6,200. So I suspect we're going to get a lower high, lower low. Finish this up. Is that where we go breaking out? Maybe. Or if we start breaking below this, the next level of support is going to be this guy, which is the weekly. And that's sitting right here. Kind of got to move my targets each week we're in class. These things move as another week comes into play. So the more we start grinding lower, this steep slope is going to start sloping off a little bit. But that is the plan. We're either going to come here to break and go out, or we're going to come down here. So far, so good. Warned you about the correction, kept warning you over and over and over and over and over and over that we needed a correction. We're in the midst of it. How many times we talked about this, and even on the daily, we said, looking at this latest chop and grind, hey, we need a lower low to clean this up. And where did we go to? See this, Emil? You can't make this stuff up. 448, 1272, exactly where we went to. Well, we're bouncing out of that. Is that the end? I don't think so. I definitely think we're going all-time high again. I don't think this is the end, and this is the Elizabeth, I'm coming to join you, and we're going a big crash, and we're making new lows, and we're headed lower, lower. I just think this is part of that bigger correction. And notice where that 618 is sitting, right where my magic Fibbo is on the weekly. That would be ideal. Why do I like this the best? Because if we can get a 618 slash magic Fibbo, so I'm going to go to a weekly and show that to you. If we can get a 618 retracement right at the magic Fibbo, and we do the combination of a 618 retracement plus a magic Fibbo line bounce, it sets the tone, not only conservative target, but opens the door for this thing to rally even to the 8,000s or even as high as 9,000. Wow. That's pretty incredible, isn't it? So I warned you, we're definitely going to go bubble hunting. Do we get here? Do we go further? We shall see. But if we can retrace further and bounce off the weekly right there, somewhere around that 658, 59 area, and you can see it here when you zoom in, you can see those levels, which happens to be that 618 retracement. But you can see the left 58, 56 on this weekly ES. So if we can get that bigger decline down in this zone, bounce off of there, the potential conservative target is going to be this 75 to 7,800. That's conservative. So we're sitting at 58 and we're going conservative to 78. I like it, right? 2,000 points. Remember, people die and go to heaven when they get a point or two. Well, how about 2,000 points? How would that suit you? And if we blow past that and it opens up with that weekly bounce, Magic Fibbo combo, we're talking maybe we go to 88. That would be 3,000 points. That's pretty cool. Or even up toward 9,000. Awesome. So in closing on the ES, whether you trade futures or you trade SPY, whatever you trade out of that parameter, be careful on this bounce. Be in a position of authority. Why would I have even scalped this today? Because it's Bounce Back Tuesday. It's like Taco Wednesdays or Taco Tuesday. This is Bounce Back Tuesday. No, the reason we're expecting the bounce is this right here. The daily giving us that little reversal. And we got our trigger to go a little higher. So I'm expecting a little bit of a bounce. But again, I don't think this is ready to go blasting off. It's possible it could. But the daily magic Fibbo that's starting to slope downward, remember it was deep slope upwards when we kept grinding higher and higher. Now that we've been grinding and lower, it's starting to turn downward. So any rally up toward that magic Fibbo should act as resistance to go lower low. Not to say we have to go up that high to test the magic Fibbo. Where you can see we've done it before as we started to close below right there. We tried to test it, failed. We pulled lower. We retested it. We went lower. So as this starts sloping downwards, maybe we rally into it and go lower low. But I'm not looking for this to go up and start slingshotting higher and higher and higher and higher and higher and higher right now. I think this is going to slingshot and go lower so that that weekly can finish the cycle. Everybody good? So we got a software. We got the technical picture saying, I don't think this is the bounce we're ready for. I still think we need more downside. Why is that? Well, NVIDIA. What's NVIDIA got to do with part of the biggest company out there, NVIDIA? That's what it's got to do with it. But I'll jump in here and show you NVIDIA. I don't think NVIDIA is done. I talked about this months ago, talked about it weeks ago, and NVIDIA is going to 150 area. Kind of where we started to break out from, the big run, and that's where we're headed back to. We kept bouncing on the daily magic Fibbo. I warned you we were going to break down. We start closing below these lows. We're headed where? Down about that 150 area. Why is that so important? Several reasons. A, let me see if I have that on this chart or the other one. I think it's the other one. 1 second, I'll show you. Come over here. This one. Infinity market cap. NVIDIA is the second largest, well, the biggest company in the land. Kind of just flip-flop between silver bouncing and NVIDIA pulling back. But that's the freshest one. Let me make sure. Yep. But NVIDIA is the biggest company in the land, over 4 trillion. for $1 move in NVIDIA is $24.3 billion with a B. Insane, isn't it? For this to move $1. Wow. So it's going down to 170. That's 150 area. So it's like 20 bucks. And it's $250 million right there. How do you know? You go over here to NVIDIA and you click on their earnings, financials, more info. Let's see if I can find that little click. Income, financials. I guess I got to refresh this. Then it'll do it for me. Sometimes you got to refresh when it won't open up. Easter sale awaits. Okay. So we come down here to more financials. Oh, it went back to NQ. That's why. No wonder. NVDA. So I still think NVIDIA's got another 20 bucks to go. So you come down here to more financials. Click on that. 24.3 billion shares outstanding. So what does that mean? When they drop $1, that's 24.3 billion. So you do the calculator in here. And we do 24.3 times 20 bucks. Wow. $486 billion. That's almost $500 billion. Everybody see it? If we're going to drop 20 bucks, you're talking about $500 billion of value coming out of NVIDIA just on that correction. What do you think the market's going to do when NVIDIA goes down, especially the tech arena? That's why I don't think this bottom is quite finished yet. And that may be what the markets are waiting for. Get that last little push on the technical picture. And why is the technical picture so obvious that we need that decline? Look at this price action. We broke below major support. You say we got this support zone here, right? But the logical point is we're going to go back and retest the breakout. Typically, you see that over and over, where you get a run up, you get to your level, you test, you test, you test, you test, you get your bigger pullback, then you go blasting off from the prior high, which is sitting right around that 150 area, where we kind of tested multiple times before we did a big retracement. Then we went blasting off to the stratosphere. And what is next up? Since we're below the magic Fibbo, next up is that 180 area. And notice from the recent low to high, what are the extensions down here? Right at it. See it? Can't make that stuff up. So that 150, 148 range is a high probability target. So in my humble opinion, I don't think NVIDIA is ready to go breaking out. I think it's decline and go test back this battle zone over here, that 150-ish, 148-ish zone where we broke out from. That's where we're headed. And if we drop that 20 bucks down to 150 area, that is $500 billion with a T dollars sucked out of the NVIDIA. And the last 3 days has been 2.3 billion taken out of the markets with the big dogs. Not the retail traders, but the big dogs have been selling big time. And yes, we're going to get with the new month some reallocation of pension plans and retirement accounts and your 401ks. So there's going to be billions of dollars reallocated somewhere. But this still looks likely we're going to retrace. I warned you, if we broke below the low, the logical point would be to go down to this zone. And I don't think this bounce off of that 165 is going to be the breakout. I think it's going to fizzle and push lower, and this will probably pull the markets down. So back to the lesson at hand. Be careful with this bounce. Yes, bounce turnaround Tuesday is looking good. I expected this. The software is telling you this, but I don't think this is the one we're going breaking out. I think we're going to fizzle, and then we're going to go lower low, right? So my next level of support, 3-day, right around that 6,000, 61, 6,200 on the 3-day is the next level. We could possibly bounce off of that to go breaking out, but I would much prefer the weekly, which is sitting down here about 56, 58 zone, 57, 5800 would be more ideal, because again, that low to high is a beautiful 618 retracement sitting right there at a magic Fibbo 618 combo bounce, which sets up some big run. So be careful. What happens if we don't hold that? Well, Elizabeth, I'm coming to join you, honey, is looming. I just don't think we're going to see that until we get this blow off top, whether it's the conservative target or the more aggressive target. We're going to get a new all-time high. Then we're going to go into some big retracement / maybe even market crash. But at some point, we're coming to visit this monthly magic Fibbo. So I said, there's no way we can go there. The more people that say no way ES can go down to this 39, 3,700 range from where we are, not going to happen. That's a 50% haircut from where we are. The more people that say it, the more likely it's going to happen. And you can see we haven't touched that magic Fibbo until way back in 2011. That's a long time ago, fellas, in order for us to go back and visit, but it's coming. And since this post-financial crisis low in 2009, we have never had a 618 retracement out of this. That's an incredibly long run without a 618 retracement. So guess who's sitting there at this monthly back here 2009 low up to where we're probably going to go, whether we go way up here, that would be ideal. We get the weekly bounce off of that Fibbo. We go to the stratosphere. Then we get this big 618 retracement off of that much bigger move. Look who's sitting there. Wow. That could be a 618 / monthly magic Fibbo bounce. And what if that happens in the coming 2030s? That could push us into the stratosphere. And notice what that would look like. I did this the other day, but I'll do it again. We do a 3.2, Emil. Take this off, and we do a 3.2. And we say, okay, this is the low. We're going to go up to a high somewhere in this zone, just for example, and we're going to come back and test the 618 magic Fibbo, bounce off of that on that monthly, and then look where the stratosphere is. 11,000, maybe up to 16,000. Sounds insane, doesn't it? But this would go into the 2030s to get way up there. So what are we doing? I think we're going lower, then higher. Then we're going to get a big market correction / maybe even Elizabeth, I'm coming to join you, honey. Then we go blasting off into the 2030s. So we shall see how that plays out. And once we finally get the top, we get the low, then we can set more accurate targets years and years out, what that might be. But this is just placating us right now. Do we get up to 8,000? Then we correct and get the crash, and then we go post and some extensions. But it is food for thought. So current action. What are you doing for me now? Expect we're probably grinding grunt. It's a little recovery, but it's going to fail. And we're going to go selling down to this bubble here. We'll reach the first one. I still think this is extremely high probability. I would much prefer this stair step and a bounce from here, find some resistance, the daily starting to turn over, and maybe we rally to that, get rejected, come down here, do it again, maybe we retest that low, rally up to that low, retest it as resistance, and we ultimately get the weekly magic Fibbo combo bounce to set the tone for us to go blasting off to all-time highs. So be careful. And I do think going into April, May, what happened last April, Liberation Day, we're right at the same thing. Are we doing the same type of price action? Last Liberation Day going into early April, we bounced off the weekly and then went ripping. Do we do this again? Start ripping in April, May, June? Or do we get something like this? We get this pullback, we rally to a lower high into April, May, June, and then we get the lower low into the fall. Then we go into next year, first quarter, etc., before we go blasting off to new highs. So the current price action is, yes, everybody and their brother says this is a falling knife, to go ahead and catch it because it's going to bounce. Well, the software said they're in agreement for a small bounce, but I would not be loading up thinking we're blasting off yet. I think we do need to go lower low, and I've been looking for at least the 3-day, which is sitting there. Stretch that out so you can see it. So what are we saying, Mr. Tucson? Be in a position of authority on this bounce. Expect this bounce back Tuesday is not a bounce back continuation, blowout, new highs, all-time high. This is just simply a adjustment, correction to another lower low. Then we'll probably get a bounce off the 3-day. Maybe we run back to whatever that low is, and we still get a rejection down into here. But I was thinking we might even get one of these, a rally back to that lower trending highs right there, lower high trending line. And we kind of drift April, May into here as we rally. And then we get the push into fall that either breaks the 3-day down to the weekly. That would be ideal. All I can say is I'm a big buyer down in this zone for a bounce. And this zone we're bouncing off of today from this original target is simply a scalp, and I'm looking for further downside. So we're either going to reverse from here to go breaking out, or possibly here to go breaking out. And if this breakout, say, goes what? Dips down here, travels to a lower high, then we get that bigger scenario and a much bigger correction. Then this really sets the tone for us to go blasting off into next year. We shall see how that plays out. But in the short term, what would I be doing here? Get back to price action. I'd be in a position of authority and not expecting this to go breaking out to new highs right now. Not going to happen, in my humble opinion. We're going to fizzle out and we're going to make another push lower. So do we get the flush into next week? That would be ideal. Repeat what happened last April, right there. Liberation Day is what that was called. The tariff Liberation Day. Well, this could come back. I'm thinking lower high, lower low at least. Then we start drifting higher April, May, end of April into Mayish. And if we end up just keeping at a lower high, then we get a push even lower into the fall. That would be ideal for this type of 3-wave correction to set up this bigger 3-wave correction there that set up that explosion. We would rinse and repeat, do it off the weekly again, right? So this is what I'm thinking. We drift lower, then we start middle of April, May, maybe even toward June, get a lower high, then we push lower into the fall, and then we go blasting off. But at least we need lower low to bounce from here to potentially break out. But I would not be surprised to see it do this type of scenario, then say fall going into end of the year, Santa Claus rally, next in first quarter, next year type of thing, and we go blasting off to all-time highs. Now we have barometers that we look for, and we've been over this numerous times, but it is a very valuable lesson. The heat map. You can't do anything without a heat map and the software in my direction. Between the three, we're set. So once we get to 200, and what does this represent? Of the 500 S&P companies that make up the 500 right there, how many are above their 200 moving average? Right now it's 44%. When it's time for Elizabeth, I'm coming to join you, honey, or the massive market correction, whatever you want to call it, it's going to be ugly. When this gets to 80, 90, more it pushes further to 90, where 90% of the companies of the S&P 500 are above their 200 moving average, that's when you better look out below. So I warned you with this correction. I'm just opening this chart and I'm going to consolidate it so we can see. This is an barometer. It's an oscillator. When we're at 80, 90%, look to sell. When you're at 20 and lower, look to buy. Anytime you get to those extremes, you're looking for the market to reverse. And now I'm not expecting, the last place we touched down here was that Liberation Day down in here. And I suspect we're going up here, but I expected this correction. Well, Mr. Toussaint, if it would allow me to do it, not on this chart, but you do your Fibbo, swing point low to swing point high, we're probably going to get that 618 type of retracement, somewhere between 0.5 and 786, some type of retracement by the time we're done. Then when we go blasting off, this baby's going to go ripping. So if I stretch this out a little bit, let me bring this down where I can get to this. Stretch this out so you can see the candles. And these are candle bodies in here. But I like my candles. I pushed that too far. But I expected that we'd get this market correction before we get the blow off top, and that we're probably not going to get the market to sell off enough to get way down in here, 20 or below. We've already done that during last Liberation Day. So I'm looking for this to end up with a higher low. Then as we go blasting off to all-time highs again, I want to see this 80% to 90% or higher. The higher it goes, the better. And when you see the S&P 500, the NASDAQ, the Dow, all of these get up at their 80, 90%, then here comes the big one. Market crash / massive correction. So that's when we know whether we're topping out at 75, 7,800 conservative target, or we get that weekly combo meal type bounce and we go to 8,000 or 9,000 insanity, and we see 80, 90+% of S&P 500 companies are all above their 200 moving average. That's when you know the big one's coming. So this isn't it. This isn't the fizzle and we're going down. I don't think we're going to get this low. I think we're going to get a bottom either on that 3-day or weekly, and we're going to be perhaps a little bit lower, but then we're going to go blasting off to all-time highs and we're going to get up here. Amen. What does this mean to us? Anytime you get to extremes, especially pushing 90, we don't stay there very long before we get the exact opposite extreme. Extreme, 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 extreme. So what was last? We hit here, we came back down. So what's logical? That we're gonna, this pullback will end up pushing us into these highs again. And then we're gonna look for the bigger correction, maybe even the next market crash. And notice when these happen, COVID. And you could go back to 2007 financial crisis. We don't go far enough back to the dot-com bubble burst. And this was these different corrections along the way. I always use this as an oscillator. So when we get up here, that's when everybody thinks, oh, the Dow's going to 50 billion and the S&P is going to 1 trillion, et cetera, et cetera. And then that's when you get the big one. So that's what we're looking for. This is going to make a higher low. We're going to go to all-time highs, whether it's the, the bigger correction and another dip where we just kind of rally up some more. Then we get the fall low. Then we go blasting out into next year, first quarter. But whenever we get up here, that's when you need to be worried that it's time for a big correction. And when you get to these extremes down low, that's when it's oversold. And you can see the market can go down a lot more before we worried about being oversold like the last Liberation Day. Fair enough? All right. And we want to see this heat map, which is on bar chart. You don't have to pay for this. Just go to barchart.com and go to their market performance, and you'll pull up this percentage of large cap stocks above their moving averages, and it breaks down the S&P, but you got others in here, Russell, Dow, NASDAQ. So when do we know it's time for a market crash? When this guy at the NASDAQ 100, how many companies in the NASDAQ 100 are above their 200 moving average, and it's pushing 80, 90%. The Dow, 80, 90%. Russell, 80, 90%. S&P, or you can go all the way up here, 80, 90%. Then it's look out below. So this is how I'm going to dictate and figure out on the chart when we go blasting off to all-time highs, and which we expect, which ones are going to be. Is it conservative target when we're in this zone and we're up at 80, 90% Dow, NASDAQ, Russell, etc.? Or do we just get up here and we still got a long way to go and we end up blasting to maybe 7,000, 8,000 or more, and then we're up in this zone somewhere, outrageously in the nines, and then we look at that barometer, it's at 90, and all those way above 80 and 90 and higher, then it's look out below. Amen? So in closing, I don't think this bounces it. We're going to go lower. Then we're going to bounce and go up to this conservative target. But the question is it going to be something like April, May, kind of rally into the fall, we get another push, then we go blasting off in the next year? Or do we go blasting off sooner? In order for us to take this bounce seriously, we got to get above this low trending high line. We break above that, then it's game on. Up and until then, I don't think this bounce is the one that's going to get us there. I think it's going to make lower high, lower low. Then I suspect, Emil, we're going to bounce again. Right? Look for a lower high, lower low. We're going to bounce off of this. But is this the April, May running into like, woohoo, it's breaking out, dude. Everybody go along, load the boat. We're going to the moon, Alice. And we might even go to the stratosphere. You better go long. And then you get the fall, coming into fall, we get that bigger correction in this bigger A, B, C type of correction. Then we go into next year and we go blasting off. But this, in my humble opinion, is extremely high probability target. We are going to get there. And I don't mean decades. Well, in the year 2095, we're going to get up here. No. Up to months. Sometime probably by next year, maybe sooner. But we get the bigger correction. It does open the door for a bigger, more substantial bounce. Should we get a bigger retracement? And then this would be extremely conservative if we come down to that weekly magic Fibbo and start bouncing, break the lower trending high, set the tone. And if we, what, Emil? We bounce from here and get there, and I look at that heat map, and it says 80, 90%, we're hovering here, look out. If we get up there and it's nowhere near that 80, 90, and still maybe we're at 70 or something, got a long way to go, then this could open the door to much higher highs. All I can say is if we get to this conservative target and we're at 80, 90, pushing extremes, or we're way up here in the stratosphere, we're pushing 80, 90 extreme, look out below. We're going to get it. So Elizabeth in Fred G. Sanford and Son, Elizabeth, I'm coming to join you, honey. Here comes the big one. And what's it going to be? I don't care what they call it. Could be the dot-com bubble burst or the AI bubble burst. It could be the commercial real estate 5 trillion bubble burst. It could be the income as far as credit cards and mortgages and everything going astray. It could be all the above. But it's going to be the Elizabeth, I'm coming to join you, honey. It is, do you pay me here or do you pay me from up here? We know what to look for, and we're going to tell you when it's upon us. So in the short term, look for this rally to be weak anemic and get some sort of rally, but I'm looking for probably because this looks just like the previous. Coming into Liberation Day, we got a little bounce. We rolled over and we hit the weekly Magic Fibbo before we went breaking out. This one hit the daily. This is the 3-day. And if we drift lower, maybe we get something like that. And we might not see the weekly pullback until maybe fall. So I'm not really looking, I'm not trying to tell you, man, this thing's going to go just plummeting in the neighborhood of about 1,000 points by next week. Anything is possible, right? But I don't think we're going plummeting 1,000 plus points on ES by next week. You know, from 64 down to 54-ish in this range. I don't think that's the case. That's roughly 57 anyway, almost 1,000 points. But it may be that we drift a little lower in the next week. Then we get April, May type of rally, then summer going into fall, get the bigger decline, and we ultimately end up with a 3-wave correction as we're sitting in late fall, looking for the bounce going into the end of the year Santa Claus rally, going into next year. But I don't think this is the end of the travel and we're going into the big, Elizabeth, I'm coming to join you, honey. The barometer's not set for that, meaning the heat map needs to be at 80, 90. This is part of that pullback, so we will get the blow off top like that. We're going to get another one, whether we come here to blow off or we do this summer rally into the fall decline, then we do it. Still think we're going blow off top. Got it? NASDAQ, I preached this to you prior to hearing of it. This low, we made a lower high that kept saying, even during all this grinding and all these rallies and these big reversals, and everybody said, we're going, we're going. I kept saying, nope, all this tells me I need a lower low. We got it. It went right to the bubble we said it would go to. Now I'm telling you, I don't think it's finished. Maybe we rally back to where this big support zone was, and then we fail and we go lower. Are we going to get to the 3-day, or we're going to get down to the weekly? Where are we going to get? Right? So you can see where the 3-day. 3 days just right around the corner. So I think we're at least going to get a 3-day. So this rally is going to fizzle. I don't think we're going bubble hunting and breaking out from this low, but I would definitely be in a position of authority on that bounce. The software said the daily started to turn, got a little trigger higher to go long, but this is a scalp, my friends. This is not a buy and hold scenario for the blow off top. I think it's going to go lower low. And the next one, it would be the 3-day, which is sitting right here. So we don't have to go too much lower. I definitely think when we get down here, we're going to bounce. The question is, do we bounce to start breaking out? Or do we get that kind of what I was thinking? We got this initial move, and then we're going to have this lower trending high here. Looked like it was breaking out, but it didn't. That was a lower high. Then we got this strong lower trending high line here. So is this thing going to fizzle, push down, hit the magic Fibbo here on the 3-day? Then we start grinding higher into April, May, and it looks like we're going to break out again type of scenario. And then we get the push into fall where we go plummeting lower low, hit the magic Fibbo on a weekly, then go blasting off. I would like to see it. Look at the weekly. It's sitting right there. So is this what's going to happen? Emil, we're going to fizzle, go lower low, bounce off the 3-day, grind higher April, May, into like the latter part of April, May, then go June, July, August, something like that, maybe September-ish into the last quarter. Then we go Santa Claus rally and we start breaking out in the next year. So this target up here, that 27, 28,000 is a conservative target. If this thing turns out to where we get the perfect, you know where I'm going, low, high, higher low, 618 type of bounce, look where that 3.2 brings things into perspective. that low, that high, and we ultimately retrace down to that 618 magic Fibbo combo bounce. Look where that pushes us, 30,000 up to maybe 36,000. Wow, that's pretty impressive. So imagine if we're here after we get that bounce, and I'm still thinking until price proves otherwise, this rally is not going to go breaking out now. It's going to go lower. Then when we bounce going in through April into May, we'll probably still end up with a lower high type of scenario. Then go into fall where we dip even further to bring us down to where this weekly is. So a little bounce today, fizzle, go lower, bounce off the 3-day, go into April, May kind of thing. And then we go into the fall, finish this weekly bounce. Then it sets the tone going into next year. We go into all-time highs, and this would be a very conservative target. I definitely think we're going to get here one way or the other. We go breaking out now, we're going to get there, or we fizzle and go lower high, lower low into the fall, and then we go bouncing off the magic Fibbo like Liberation Day type of move. And notice if we just repeat that, see this guy right here? You do a Liberation Day bounce, and we get that again going into fall, you still get to 30,000. So you see why this is conservative target. That's conservative. This is aggressive. So when do we bounce to go breaking out? In my humble opinion, Harold, that's not it. So this 368 point bounce looks good. It's just oversold at the moment, and it needs a little depressurization, but I don't think this is the one we're going breaking out just yet. So again, if we follow the same line of progression, we're going to go a little bit lower. Then April, May, we grind, probably make yet another lower high type of thing. And then we go into the fall and hit the magic Fibbo weekly. This is ideal. And then we go blasting off Santa Claus rally, year end, first quarter next year type of thing. And we start blasting off. But on the cards is that bubble up here, and this conservative 27, 28-ish range. And if it turns out we get the weekly magic Fibbo bounce, so again, where's the first place we going? 3-day. We don't hold that, likely going to the weekly. And wouldn't surprise me to see us make lower high, lower low, bounce off the 3-day, rally into another lower high April, May, maybe June, then July, August, September kind of thing down. Then we go blasting off Santa Claus rally into next year. And we go not only to this conservative target, but potentially open the door to the 30,000 plus up here. Wow. That's the big picture. Russell's the different. It's been holding up better. We're still at a higher low. We're still honoring this. I still think Russell's going 3,000, 3,100. Highest of highest probability. Definitely think we're going higher. Got it? Definitely think we're going higher. So with that in mind, how much lower do we go? We may need a little push lower. All I can say is I definitely think we're going up here. This one's holding up better. So do we come down here to bounce and get a weekly bounce? Maybe. That would be beautiful as well. All of these are setting up a potential 618 type of retracement / magic Fibbo bounce off the weekly. And then if we did something like that, not only we go to 3,000, 3,100, we might even extend it to 35. All right, let's continue. I wanted to show you this before we end today's class. The markets are not in good health right now as far as rate cuts. Remember, I warned you that they were not going to cut rates because the 2-year maturity rate was too close to the Fed rate. There was no room for them to cut a quarter point. Look at what the 2-year maturity rate's been doing. Mr. Toussaint, they have now bet more than 50% we're going to get a rate hike before the end of the year. That's a big difference. Then we're going to get 3 rate cuts in 23, 24, 25. Remember, he kept saying we're going to get 3 cuts here, 3 cuts there. And I said, not so fast. And I even warned you about this many months ago. Look at this bigger picture and bring it into perspective that we might even see a big run up of inflation. And what are oil prices, the whole scenario, what's going on with that? They start closing and pushing that $100 a barrel, then your big companies like Exxon, Mobil, and ConocoPhillips and all those guys will be printing money. But if we get this big run in inflation, maybe we get something like this before we get the big market crash. And this arrow is not conducive to the years. So we're just going to keep running higher in inflation to the 30s. Then we're going to get a crash. No, we could certainly crash starting next year for its market. So I don't want you to pay attention to the years on my arrow, but this is just saying we could go up. Look at where this 2-year maturity rate was. We're testing the previous highs we sat in the 06s, but we come to a monthly chart and you see that bigger picture. We have a lot more. Back in the 80s, we were way up here. Then we just kind of grinding. So could we get a push into 6, 7, 8, retest some of these zones? The 6, we come up here into the 89 area where we're at 9%, 10%, 13%. This thing could easily go ripping in the 6, 7, 8%, maybe 10%. But why do we even look at this? This preceded every market crash known. Right? .com bubble burst preceded. Then we got 2007 financial crisis. We got the COVID, even before COVID hit. And Elizabeth, I'm coming to join you, honey, is inevitable. But this is telling us, this is looking like we're going to get rate hikes, not rate cuts. And that's how we could get our markets to go down in the fall, go even lower. And tech is very sensitive to rate hikes, interest rates in general. So we started hiking interest rates, then the tech companies, the Magnificent Seven, it looks like the Bag Seven, because they've been getting pounded as of late, right? I'm looking at a few of them. I'm still very bullish on Meta, but we do have a new lower low now, right? We're seeing that lower low uptrend holding so far, but it's going lower low. That's METU, but let me go to Meta. That's the leverage product. And it's been getting that pullback. We're still at a higher low, but this thing could give us that rally into lower high, lower low into, October, whatever. Then we go blasting off into the end of the year, next year type of scenario. But I'm very bullish on this long term. I definitely think Meta's headed to 1100, 1300 zone, but it's going to take time. It's going to take years. And the question is, do we get a bigger retracement on Meta like the rest from the low up to the high? Do we come down to 350 range? Sounds insane, but maybe we rally and we get the big push where the tech companies come down to the weekly magic Fibbo, that kind of thing. We get a little 618 retracement. Let me turn my magic Fibbo back on. I know what I did wrong. I did my DGS2. Let me go back to that. Then I'll fix that. DGS2, 2-year maturity rate. Then you add to it the Fed fund rate right there. Fed fund rate. Now we're looking right. Here we go. So this is the Fed rate currently between that 3.75, 3.5, right at 3.64. And look how this maturity rate's rallied. So this could be inflation getting ready to go blasting off with oil prices, etc. That could go blasting. So be careful with this. They're pricing in. That could affect the, obviously, tech markets because of sensitivity. But these guys may need some more downside. And I just did it again. I got to stop doing that. But you get my point. So let's continue. Look for this to go lower on the dollar index. Look for us to go rally and fizzle on this Russell 2000 ES, NASDAQ, etc. I don't think those are finished. I don't think this is the breakout. I think it's going to go lower low, then rally in the summer, then drop in the fall, and then go blasting off in the next year. If I'm wrong, we got to break above this line, then we could start talking, but this target is a given and potentially could set up to the extensions as we just discussed. NASDAQ, same thing. I don't think this is a reversal. I think we're going to go lower. We hit the 3-day magic Fibbo, which is sitting there. That's my next level of support. We don't hold that. We'll go down to the weekly. But what likely will transpire in here, we fizzle, we go to here, bounce off of that, go into the fall. Into April, May, then go into the fall, go visit the weekly magic Fibbo, then fall into Santa Claus rally next year, at least to this, if not a blast off into the 30,000, which is up there. And then we get the bigger correction after that. But I'm going to guide you day by day, week by week, month by month. So if you're buying the bounce, take aggressive profits, because I think that's going to fizzle and go lower low. Then we're going to rally April, May, probably at a lower high, then go into fall, make a lower low. Ideally, I'd love to see this bigger correction end down here on the magic Fibbo on a weekly, and then turn down after we bounce off of that, then we go blasting off. That's kind of the plan. Nikkei global liquidity, still think this is probably going to rally toward the recent high to low, that's 618. So we may get this April, May kind of rally, then we get a push into the fall, then we go blasting off year-end type of scenario. So I don't think this correction is over and we're ready to go blasting off just yet. That's why I'm looking for this to kind of travel higher as we rally into summer. Then we get a bigger decline in fall. And then maybe we get a weekly bounce off of this one going year end. So all that's pretty much standard looking at that. Let's continue since I've been a little winded today. We're looking at gold. I'll go with black gold. This is a critical zone where we close today. If we can close above, especially this weekly chart, if we close above that 618, that sets the tone. We're going higher high. If we continue to go higher high, then that insurance rate, the S&P, is likely to go lower as this goes higher during that correction. And what is this going to do? Inflationary pressure. We start closing above 103, kind of sets the tone. We're going to 124, 130, maybe 140, 150. And this could blast off. And you think, well, that could never happen. Oil can't go that high. Oh, yeah. And that would put that DGS2 pushing higher and the Fed starting to raise rates because of this inflationary pressure. Got it? So this is critical zone to watch. Are we going to fizzle here and close lower and come down, or are we going to go blasting off? Rubber meets the road right in this zone to see where we close today, and it's a big one. Do we close above the 618 or not? That would be a weekly, even this monthly close. That's critical. See that big monthly candle? We close above that on a monthly candle, the body of this thing, because it's right at the price action, just barely above it at the moment. But where we close today ends this month. How does it say we go into 150 up here? Or does it say we're going continuing lower? Be very careful. This is extremely volatile. One tweet, this thing could end up here. One tweet, this thing can end up down here. Be in a position of authority, but if this thing closes above this 103 plus today, say 104 where we are, if we close there today and start a new month, likelihood we go on higher high looks very promising, which is unfortunate because gas prices are going to go higher, inflation is going to continue to push, and the Fed is likely going to start raising rates. But that's why they're pricing in better chance of a rate hike by year end than a rate cut. And that's switched, and that's why our markets are kind of struggling right now. Amen? So watch this. Gold, be careful with gold, extremely careful with gold, because I don't think this rally is the end. That is a reversal. I think that's a 1, 2, 3. This is part of the 4. And this thing could go a little higher, kind of grinding. But I'm looking for this, as I told you the other day, that I didn't think this was the end of 4 and it was over. Because typically when you do a 1, 2, 3, 4, wave 4 takes 3 to 5 times longer than wave 1. So that would probably give us another few weeks, or at least several more days of this kind of chopping and grinding before we get the final flush. So I don't think gold is bottoming in reverse from this low. Be careful. Hint, hint, hint. I don't think this is ready to go blasting off. I think we're going to get another flush. I called for 4,000, 3,700. And now that we got the 4,000 in this chopping bounce, this looks like the 1, 2, 3. We're still correcting in 4. And what happens when 4 finally ends, whether we grind a little higher or we just chop sideways, we need one more flush. Then we can talk about this reversal. So again, be careful on this rally. If you're trading gold today and you're up $100, take your profits. Don't think we're ready to go blasting off. Area to watch is up near this 5,000. If this is 1, 2, 3, and 4, 4 can't go into the area of wave 1. So again, I'm just going to mark that for you. If that's 1, this is 2, that's 3. This is a 3-wave correction in 4. I would expect us to go a little bit higher. Maybe we push toward 47, 48, something like that. Then we go plunging down toward the lower part of making a new low below 4,000, probably pushing toward that 38, 3,700's my target down here. Got it? And guess who's sitting just below that is the 3-day magic fibbo. So maybe gold needs to do its final push, get down here to the 3-day magic fibbo, push a little bit lower than my original target, and bounce off of that. But I do think gold rush is not over, and we are going to go blasting off to the stratosphere again, but this correction to the downside is not over. Amen? Same thing with silver. Silver did not push as low as I had liked, and I don't think this is the end of that move either. I still think this is going to fizzle and go one more push. I'd love to see this thing push down toward that magic fibbo. Somewhere around that $50, $40 range would be ideal to set up the next big run. So be careful on any longs. You're up a few points today, great, but be careful. I don't think this is a breakout right now. I think this is going to end up with a high, low, maybe a 618 retracement out of that, then lower. This does not look complete. This looks like we got more downside to fulfill before then we go breaking out. And last but not least, Bitcoin. I still think Bitcoin probably going to hold here, but the bottom line is we're going to 50/30,000. This is the buy zone, right? This, in my humble opinion, is not the low. We are going to make new lows, whether we rally up here into the summer and then we go fall down into here, then we start reversing. So I'm not telling you it's going to reverse that fast. We have halving in 2028. Let's go out to a weekly. You can see that. Halving's way over here, this blue line. We do know the structure that every halving, Bitcoin goes on a 12 to 18 month run. You get a low, crypto winter low, it drifts higher into the halving, then it goes 12 to 18 month run. That's rinse and repeat over and over and over. You go back from the very first one way back in 2012. It did a 12 to 18 month run, pull back, grind it higher to the next halving, 12 to 18 month run, pull back in the winter, then it grind higher, 12 to 18 month run, pull back, next halving, 12 to 18 month run. So we know it tops out every 4 years, 17, 21, 25, and we bottom out 14, 18, 22, 26. So that's the rhythm. So anytime Bitcoin hits 50,000 or lower, buy, it pushes 40, buy more, it pushes 30, load it up, and then hold it till late 2029, just like we bought down here. I preached 20,000 and lower is a steal of a deal. Hold it till we get to fall of 2026. Done. Now we're looking for the low in 2026. And now we're going to hold it when we're in the 50 to 30,000 range. We're going to hold it 12 to 18 month halving of May of 28, which would put us in the fall of 2029. So it's a 3-year investment from 26 to 29, just like this was from 22 to 25. And that one before was from 18 to 21, et cetera, et cetera. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.